Gurmeet Chadha as well joins in on the show right now. Gurmeet, hi, afternoon. A mesmerizing move on Indian IT. But you think for those who have, completely given IT escape for the last 1 odd years, should they wait it out for one more quarter and see how steady this earnings is?
Aisha, this is what market does, right? It just keeps humbling you. So when the outlook was negative, and I remember our discussion last time that market is moving into spaces which are written off or out of favor. We saw that with pharma earlier in December, and now you're seeing a bit of that with IT with results not coming. They were not great results, but they were not as bad as what this market obviously discounts the future. But valuations are rich. It's not that, an Infosys and TCS are cheap. You'll still probably on a best case basis do high single digit growth next year, right? But you already trade at, in Infi probably 25 times FY25 and TCS upwards of 30 times. So I think, a bit of short covering might also have happened, especially with respect to Infi. I think got to be selective in IT. I still think that the revenue mix is important. I think so HCL probably still is little more reasonable, and a Tech Mahindra is little more reasonable right now. In mid-cap IT, again, you have to be selective, more focused towards ERDs, more focused towards companies with higher share of digital and discretionary, because that's going to pick up. So got to be more selective here. Even some of the mid-cap IT names trade at 40, 50 times. So you're not going to get that kind of growth except for, few pockets. So got to be a little more selective.
Being selective, Gurmeet, if I remember it right, you had bought Polycap at the time of IPO as well, right? And you had been a long-term investor. I'm not sure if you're still holding that or not in your portfolios, but what do you make of the kind of headlines that we are reading on Polycap?
Little disappointing, to be honest, right? I expected a little more, communication and more clarity on this. It's more of they denying and then IT. I don't remember IT department putting up a notice on the portal, let's say 2 weeks after the search. So I think it's incomplete information right now which we have. So probably we'll wait it out. But what happens is that which is what I've said, market gives you returns, and then if there is any concern which happens because you're priced so high, it takes away those returns in a few sessions, and which is what has happened in this case. It became 10x since IPO, and suddenly 20-25% is gone in no time. And that's why it's important to have your risk metrics in place, concentration in place. So typically, we don't advise more than 3-4% in a mid cap name which you want to take a position. Keep rebalancing things, and in large cap probably you can go a little higher. In small caps, for example, we do 2 to 3%. But I would like to probably hear more from the management in terms of what has really happened. I think that part I think is there. But as far as business is concerned, see, you get two multiples: one for the earnings and the business you do, second for how well governed the company is. So you're not going to grow at 50-60% to command a 50-60 multiple. That premium is because of the re-rating. And any event like this, does it on the opposite. So you want to. So two things I look forward to: hearing the management in terms of what exactly it is. I think the information is complete. Second, the earnings on 18th of Jan, and post that, I think you'll probably take a more informed call.
Holding on to your positions in Polycap right now, then net.
I'm not doing anything right now. As I said, it's just 3-4%.
So wait and watch. Holding on to your positions is what I'm saying then.
Yeah.
Correct. Okay, so in the meantime, we also did speak with a whole host of experts to, as to what we should make of this matter, right from an analyst who was again saying that it's better to wait it out. In fact, our cable is the stock that Prabhudas Leader likes at the moment within that cables and wire space. But also listen in to what the founder and MD at InGovern had to say on the matter. Mr. Subramaniam talking about the income tax rate or the probable income tax rate at Polycap.
The income tax keeps sending out notices to all companies, be it listed companies. But what is surprising here is the scale of the unaccounted cash that is about 1,000 plus crores. The scale is very high, and that is the reason. Otherwise, the income tax department is always sending out notices to companies at large. So, yeah, as you rightly said, obviously there would be a tax demand on the unaccounted cash, which is at the marginal rate 25 plus this one. Plus, obviously, the penalty, as you said, 200% up to 200%. So it could anywhere be 50% of the unaccounted income, so to say. So if it's 1,000 crores, the total tax demand could be 500 crores, which is a huge number for a single company to bear. And obviously that they will contest it in the income tax appellate tribunal.
Okay, that's the word coming in from Ingavan on how they are reading into the proceedings with Polycap. In the meantime, while of course IT is having a field day, that's not quite the case within HDFC Bank. I mean, even Reliance has made a move now. For a third consecutive day, Reliance is actually in the green. Not quite that 2.5% move that the stock saw last two trading sessions, but nonetheless, about a 1% uptick is what you're seeing on RIL. But Gurmeet, what explains this listlessness in HDFC Bank?
Yeah, I mean, it's a little surprising if you ask me. I think the quarterly update was I won't say bad. It was probably in line. I think what is probably happening, Aisha, is that you are getting the same growth probably at a slightly lower valuation, so same valuation in other parameters. So HDFC trades at, let's say, 2.5. ICICI also trades at 2.2 times. Axis trades at 1.9 times. Some of the other private banks trade at the same multiple. So there was a time you were growing 20% and you had a pristine asset quality, and others were growing lesser and they didn't have a great asset quality. So you were trading higher. So I think maybe it's got some allocation has shifted. And I think the street also wants to see how the merger is playing out in terms of the compression in names, in terms of how the CASA is showing up, what will the impact on net interest income, etc. So I think market probably also wants to wait it out. I've not seen HDFC at 15 times earnings in a long time. So I think it clearly has value, considering that the market Nifty is at 21 times and price to book at 2.2 times. So I'm pretty constructive. It's just that probably it's going to be a little more long drawn. And mind you, the weightage is 13-14% of the index. So it will take a lot of flows also to move this, and probably more FI buying. It's been an FI favorite in the past.
FI favorite for sure, but also listen in to what Vikas Khimani of Carnelian Asset Management had to say about the IT sector.
We've been quite positive on the IT sector for quite some time, and we have never been perturbed by quarter on quarter. As long as we believe that there's a long-term trend which is in favor, and I've said in our past interactions as well that we are positive on IT, and I think the execution cycle will only pick up. And I've again said that IT is the best trade on interest rates coming down in US. The developmental spend will come, and as the execution accelerates of the order book, growth will come, and that you will see, in quarters to come, only getting better.
Okay, Vaishali, I wanted to discuss the PSU banking stocks with you. A Karnataka Bank, a Bank of India, Bank of Maharashtra, they're all powering ahead. Any names that stands out? Because for the last 3-4 sessions, PSU banks are bouncing back.
I totally agree, because today was a day where we saw good participation coming from the PSU banks. So yes, Bank of India was also on our radar, and I think there is still a lot of scope to go up, for further upside. I would say maybe towards a target of 135, 140. But besides that, I'm also looking at Jammu and Kashmir Bank now, because we saw some momentum setting in today. So I think this stock has also been consolidating. I think this is a favorable buy at these levels, and one can expect a target of 140, currently at around 129. So just a trading target strategy. But the top of the line, SBI, PNB, Canara Bank, they're also looking quite positive for the new round of momentum to set in. So I think overall the PSU banking counter should do well.
Gurmeet, on the entire power story, and I was just, looking at the list of what mutual funds actually bought and sold in the month of December. And I'm just looking at the mid-cap list. While sure enough, there are buys like Vodafone Idea after that successful QIP that Bank of India had and the kind of participation it generated. It has names like JMR Airports, etc. as well. The sell list is PFC, REC, NHPC. NTPC, of course, is still very much part of the buy list. Or actually, no, even NTPC is part of the large cap sell list. Do you think these stocks have now run up to the valuation that they can generate for the next foreseeable future at least?
That's for me, Aisha?
Yes, Gurmeet. NTPC, REC, PFC, have they run up too much too soon?
No, yeah, so obviously they've gone up, but I don't think so. Valuation is pretty stretched in that case, still between high single digit to early teens. Some of the lenders, especially RCPFC, obviously have run up, and probably you'll get the same valuation in some of the private sector banks right now. Also, their NPA norms and classifications is slightly different than how banks and NBFCs do, which probably come under RBI. So, in general, I think you should play the power sector through three, four subsets in my view. So if you see, for example, we are going to add almost 80 to 90 gigawatts of thermal power for the next 6, 7 years. We are going to go up to 500 gigawatts on, let's say, the the non-fossil fuels, which is renewable energy. Imagine the demand it creates. So, for example, for transmission lines alone, you have an outlay of almost 2 lakh crore, which is like 25,000 crores every year. The demand on insulators, transformers, etc. So I think if you go to ancillaries, probably that's where probably there will be a bigger delta. So whether it is transmission, whether it is transformers, insulators, etc. The second is in terms of the movement to clean energy, where you play through EV charging, you play through ethanol kind of plays, which is either through Praj or EV charging, let's say through Tata Power, which is currently a small part. And then you go to the generators, right? These are the larger names having plants there. Reliance has seen an up move because the market now thinks that the capex would not be as high, and they're probably nearing the end of the capex cycle, and there'll be some monetization. So play through a portfolio approach, have maybe three, four different subsets. I think that's a better way to play. I think some of the PSUs still make sense, especially Power Grid and NTPC.